Let's start with the week review. Equities market review this week. The Nigerian equities market resumes trading session Tuesday from a day public holiday with a decline as index depreciated by 0.20%, representing 58 billion naira, and its market capitalization settled at 28.47 trillion naira respectively. While on Wednesday, which is the second trading day of the week, the 3rd of May, market sustained its negative sentiment by 0.17% with about 48 billion naira, while market capitalization depreciated further to 28.427 trillion naira. On Thursday, however, benchmark index reversed the previous negative trend by 0.16%. That's about 45 billion naira in terms of money value, as the all-share index and its market capitalization increased to a new level of 52,290.75 point and 28.472 trillion naira respectively. Meanwhile, the market maintained further the positive momentum we're beginning to see in the market as the NGX all-share index rose at the close of Friday by 0.34% to settle at a new reading of 52,466.52 basis point, and its market capitalization settled at 28.56 trillion naira respectively. Well, that's the position of the market. As if you look at the weekly review, the market has performed by 0.12%, and of course 2.37% talking about month to date rather. So let's have Ambrose Omodion. Let's get started. How would you like to attack this?
I would say it's a mixed market on the positive direction. Mixed market for the 4 trading days. We had about 2 down market of Tuesday and Wednesday. On Thursday, Friday, market rebounded powerfully. You can see that market has recouped all loss for the week to close in the green. That means for 2 weeks now, I've seen market maintaining a good rebound after the last week. For me, it's a good one. And don't forget that market feed on some information, and this information are very crucial. One of the information I would say is the earnings, which you know that as from last week, I've seen numbers of earnings that came to the market that beat market expectation. That is one. Another one is that during the week we saw a positive macroeconomic data, which I told you in the morning about the purchasing manager index for the month of April, that the economy have bounced out from the contraction stage was experienced in the month of February and March. For me, it's a good news for the market. And also, I'll tell you, as I've seen that in mature economy, where the central bank said, oh, yes, we'll hike our rate for the last meeting, but this is like a sign of the last rate we expect in that domain. I would believe that they started the hike, which our CBN also jumped into by May last year. Now they are telling that let's see what they do in their next MPC meeting. And also, this is the period of transition, I'll tell you. Expect that by we should have a new president to preside over Nigeria economy for the next 4 years. If that would not bring a lot of idea or insight to investors, because we expect to show a policy shift from the incoming government. Actually, the policy statement of the president-elect and the team are so that they have set to see the ground and start running. These are the things that will drive the market up and down. But for me, in the last 24 years, we have seen that the month of May has been a mixed month, but close positive for 15 years, and the other one market was down. It tells you that May, sell in May, that is a mantra in the mature economy, and come back in October, has not worked exactly in the last 5 years in Nigeria market. For me, I said that this market will go to close positive, and if the trend continues, I said last week that the year 2023 might be better than 2021 too. Why I say so, we have seen that earnings for Q1 has started on a positive note, and anywhere in the world, when you see, positive earnings, it signals that price will respond to that, and it might not be immediately on this first quarter. If it is sustained in the coming quarters, yes, we expect that prices will go in that direction. And if the government come and they start with a good policy, foreign investors are likely to look the way of Nigeria. That means our market might see some for me, reaction that will put it off. For me, investors in the market should not panic, but we traders will not play with the volume. If you look at as we speak now, at the end of the week, volume traded was above average for the week. For me, it's a good volume to support the market. That means we should look at this trend where the market is going, looking at your money flow and the sentiment in the market. Money flow is looking positive. As at yesterday, it's almost 70 point in money flow. Today, it has gone to almost 45 to 75. Good one for the market, and positive strength also in the market in terms of momentum. For me, there's no cause for alarm.
Okay, let's head straight to the online now. Mr. Kofi, talk to us. What's your take on the movement of the index in the week? We saw the market, decline for 2 days straight before bouncing back on Thursday and today. So talk to us. What's responsible for this?
I think the market completely differ from what we know the market is all about.
Okay.
By the time you mark down this market, most of the stock go down. But for the first time, we have seen stocks that have been marked down for their dividend and they are rising. We have seen it in Dennis, we have seen it in GT, and we have seen it in other stocks. What it means, the market is deeper from what normally is tradition. Most of the people selling their shares in order to say that when after marking the down, it will go further down and get position. But this year is completely different. Mark down and the stock will start rising, maybe because of the Q1. And secondly, that it is still the local investors or the Nigerian investors are the ones that are playing the market. And we know it, and we refuse to sell. And therefore, there is more than coming down, and I'm not surprised for the market close positively.
What is likely to change? What news should the market expect to change the dynamic or to impact more on the current posture that has been recorded in the market?
Well, the news, the smooth running of the transition of handing over, it's likely going to change the entire trend of the market. And not only that one, we are seeing synergies between the president and the elected president. And that gives us hope. And we can even predict what the likely direction is. And then forget that the present president decided to take the steps that will make the transition much better. When he suspended the subsidy, today they have combated the means and ways which is hanging in the CBN as now a long-term debt to the government. So it is the way try to say, look, the president, I will smooth this position before I hand over to you. This is the total debt. You don't have this yet. So that everything is becoming more transparent and giving the confidence of the financial sector. And this, if continue, I can assure you the market will bounce better because it shows you that we are likely going to ride it better.